Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, people? How are you guys doing? Today I want to talk to you about 5 facts about online trading in 2021. For the ones of you that don't know me yet, my name is Andrew, and for the last 10 years I've worked in many retail and institutional Forex brokerages in Europe. Join me in this amazing journey and find out the hidden corners of Forex trading from top industry specialists. Learn what most Forex brokers don't want you to know by watching our daily broadcast. And if you like what you see, guys, like, share, subscribe, and support us in delivering more great content. I'll give you 30 seconds to absolutely smash that subscribe button down below. And then we get started. Smash that subscribe button. It doesn't bite. I know you want to do it. Just click on it. 5 facts about Forex trading in 2021. Coming up. Right, guys, and we're back today with 5 facts about Forex trading in 2021. Number 1, and very, very important, Forex trading is real, guys. Trading online, trading currency pairs is as real as it gets. It's been around since the 1900s. And if you think, well, we've been trading stuff, guys, 2,000 years ago as well. It wasn't on a computer. It wasn't on a fancy tablet or a fancy iPhone. But we did trade things 2,000 years ago. This is how it goes. So Forex trading is real, guys. It is the real deal. It's there. It exists. It's real. People are using it. Banks are using it. The big players of the market are using it. Everyone is using Forex trading. If you're not trading foreign exchange, you could trade commodities, indices, stocks, and why not cryptocurrencies, guys, on most Forex trading platforms. Number 2, Forex trading is regulated, guys. I know there's a lot of scams out there. I know the Forex industry and the online trading industry got a bad rep in the last few years. However, there are people that are fighting every day to change that. Forex trading is regulated, guys. In every country, you have a financial authority that supervises stock markets, that supervises the online trading, that supervises the money companies. So yes, Forex trading is regulated, guys. Now, you do have some unregulated companies out there, but most of them are regulated, and most of them do operate in Europe. Number 3, this takes us to number 3, guys. Can Forex trading generate income? Yes, guys, the answer is yes. Forex trading can generate income as long as you do it the right way, as long as you have the correct approach to the markets, as long as you know what you're doing and you're not spending your life savings on a dream, chasing a dream of making $1 million with only $1,000 by next Friday. Then yes, Forex trading can generate income. You need to have the right approach. We all understand, or people of the industry at least understand, that wealth is generated over time, guys. It takes a bit of time to generate wealth. And if you stick to the rules, and if you stick to the simple rules that we're going to teach you, that everyone that has been involved in the financial markets can teach you, then you should be okay on the long run. Yes, you're going to have bad days. Yes, you might have bad weeks, or who knows, bad months. But if you stick to the game for the long run and you're constantly learning from your mistakes, then yes, Forex trading can generate a passive income. Once you got to that point of generating a passive income, then you can raise the bar a notch. And you might want to look at it for a full-time income. It is possible. I personally know people that do this for a living, but you need the right approach to the markets and you need a bit of time. Which takes me to number 4, guys. I'm going to try and play it fair with you. Number 4, Forex trading is risky. Yes, guys, anything is risky in life. Buying a car is risky. Changing your job is risky. And I'm sure a lot of people can support me on this one. Getting married is risky, guys. Having kids is risky. Everything in life is risky. As long as you mitigate the risk and you know exactly what you're getting yourself into, then there you go. So yes, I know many of you will say investments are risky. I know people that lost money in Forex. I know people that lost money with investments. Yes, that's correct. People do lose money with investments. In fact, over 70% of the retail Forex traders do blow up an account or 2 or 3 until they get back on track, until they learn from their mistakes and they do things the right way. But the results are there, guys. Yeah, the results are there at your fingertips. All you have to do is learn about it, have the right approach, the right attitude, and then things won't be as risky as they were when you first started trading in your first day. I hope that makes sense. And now, number 5, guys. Number 5 about Forex trading in 2021. Even if you don't trade, you are a passive participant on the Forex market. And I'll explain to you how and why in just a few seconds. Let's look at it this way. Let's say you're living in Europe and you're working for some US-based company that pays you in US dollars every month. Let's say you get a salary of 2,000 US dollars a month, but you do live in Europe. Are you a passive participant on the Forex market? Yes, you are. And I'll explain to you why. If you exchange the $2,000 that you're getting monthly from your employer into euros, will that be the same amount every single month? No, it won't. So you are a passive participant. If you're traveling for business, guys, well, in the last 12 months, that's out of the question. And probably in the next 6 months, that's going to be out of the question. But let's look at it in general. Let's say you're traveling, guys, and you land in New York from London for your business meeting, and you're hungry and you need a place to stay. Are you going to exchange the currency you had in your pocket when you landed into the local currency so you can buy a sandwich, so you can pay for your hotel? Most probably you will. There you go. That means you're a passive participant on the Forex market. This is how it works, guys. Let's say you're retired. Yeah, let's say you worked all your life in the States and then you retired in Europe. Are you getting paid in US dollars? Yes. Are you doing a conversion into euros every month when you're getting your pension? Yes, you are. If that's the case, you are a passive participant on the Forex market. You know what you're missing as a passive participant? That tiny bit of profits that people could make from exchanging currency. That's what you're missing. But there's no doubt about it. As long as you have a card, savings account, credit card, as long as you're getting some money into a bank account once a month or twice a month, you are a passive participant on the Forex market. Now, it's entirely up to you if you want to take advantage of that and take it one step further and maybe trade the Forex online part-time to try and cover, let's say, the fees that you're paying when you're exchanging currencies, once a month or twice a month. That's your choice. You could do it. Again, it's at the finger of your, it's at the tip of your fingers. You can do that easily with 2 clicks. Now, this was it from our side today, guys. These were the 5 minutes of wisdom. If you would like more details, if you would like to start your trading career, contact us. Let's make sure you start your trading career the right way. InstructFX.com, info@InstructFX.com. Or if you want my direct email, thechartwhisperer@gmail.com, guys. And by the way, we invite every trader out there that had a good or bad experience in the financial markets to contact us and come forward. And we will make sure your voice will be heard through our daily broadcasts. This is it from our side today, guys. Join us again tomorrow for another 5 minutes of wisdom. And we're coming back live in less than 2 minutes with what is supposed to be the US markets open today, Monday, 18th of January, 2021.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. Happy Monday, people. What's happening, beautiful people? Good morning, America. Good afternoon, Europe. And welcome, everyone, to our live stream. Happy Martin Luther King's Day to all our U.S. viewers and all our U.S. friends. How are you guys doing? How is everyone doing this afternoon? Let me know in the comments box below. And please remember to absolutely smash that like, share, subscribe, guys, and support us in delivering more great content. It doesn't cost you anything. It doesn't cost us anything, but it means a lot to us. So like, share, subscribe if you like what you see. Follow us on our social media channels and stay up to date with the financial markets, guys. Now, hit that subscribe button. Hit that subscribe button. All right. Now, let's get down to business and see what's happening in the markets today, Monday, 18th of January, 2021, guys. U.S. markets open. Coming up. All right. And we're back with the hottest headlines for today, guys. We're going to do a quick market review. We're going to have a quick look at the charts. And in a few minutes, we're going to have Neil Wilson joining us from the heart of London, Chief Market Analyst at markets.com. So stay tuned. Don't miss out. Let's see what's happening today in the markets, guys. The U.S. celebrates Martin Luther King's Day, and the stock markets remain closed with the National Guard deployed in several U.S. states to prevent violent protests. The earnings season for the fourth quarter of 2020 has started for a few days now. And tomorrow, Bank of America, Netflix, Goldman Sachs, and Charles Schwab are only a few of the big names that will report their quarterly earnings. Joe Biden, the new U.S. president, will issue his first list of executive orders to try and reverse some of Donald Trump's actions today. European currencies traded lower today, pushing the euro to 120 and the pound to 135 against the U.S. dollar. Gold futures are still trading close to the $1,800 mark. And Bitcoin, guys, everyone's favorite, the champion, the star, is trading below the $37,000 mark, creating two lower lows after an impressive rally last week. Welcome to what's supposed to be the U.S. trading session, everyone. Now, let's have a quick look at the economic calendar, guys. Today, we're not going to have the U.S. markets open. The U.S. markets are closed today as America celebrates Martin Luther King's Day. Martin Luther King Jr. So we had a very few announcements on the markets today. We had a few announcements from Italy, guys, that weighted heavily on the euro. Yeah, we saw the CPI month-to-month and year-over-year coming out in red below what economists were expecting to happen. Then we had another press conference, tentative of a press conference from Christine Lagarde, guys, the ECB president, followed by Eurogroup meetings. Now, we had a few announcements this afternoon, guys. We had from the euro side of things from France. Yeah, we had the 12-month, the 3-month, and the 6-month bond auction. Yeah, we had the foreign security purchases by Canadians at 8:30 in the morning, which came out. Yeah, and shortly from now, we're gonna have some announcements on the Kiwi dollar and the Aussie dollar. No announcements from US this afternoon, guys, as the US markets are closed. However, this doesn't mean nothing is happening in the US. So let's see what is happening in the US this afternoon that we should know, and how would this potentially affect the financial markets at the opening tomorrow. So in Richmond, guys, gun rights activists will converge on a Virginia state capitol today for an annual demonstration that falls at an especially tense time this year after the 6th January siege on the U.S. Capitol and 2 days before the presidential inauguration. Lobby Day has authorities on alert in Richmond, about 110 miles south of Washington, D.C., where Democratic President-elect Joe Biden will be sworn in on Wednesday, replacing Republican President Donald Trump. Lobby Day takes place in a highly polarized climate following a year in which anti-racist and white national demonstrators clashed across the United States, and as strident Trump supporters cling to hope he can remain in power. Nationwide pro-Trump demonstrations scheduled for yesterday largely fizzled after the FBI issues warnings and several states deployed the National Guard, guys. We're showing up to remind them that we're still here. A gun right activist who identified himself as Trevor told Reuters outside the Virginia State House yesterday evening, walking the perimeter to help plan the protest. Virginians traditionally petitioned their lawmakers on Lobby Day at the start of the state's General Assembly session, with the pro-gun Virginia Citizens Defense League taking a leading role in recent years. Other groups, including the anti-government Boogaloo movement, will attend today, as could liberal demonstrators. Lobby Day always falls on Martin Luther King's Day, a national holiday honoring the civil rights leader assassinated in 1968. Boogaloo boys also walked the perimeter of the State House yesterday, striking possessed with semi-automatic rifles for photographers. Right. Very, very, very awkward what's happening, at least from a European, guys. Even though I do have some ties with the US, I'm still a European, and it's very awkward what's happening. I don't get it. I mean, why do you have to flash all those machine guns? What do you want? I mean, you're already walking with those guns publicly. What more do you want? Police estimated last year's crowd was at approximately 22,000 people, carrying guns. You can imagine, guys, things could go south very, very easily and very, very fast. That's why FBI issued a lot of warnings, and they have the National Guard on the streets today. Right, let's move on. Let's see to happier things. Let's see what are the top 5 things to know in the markets today, guys. China's GDP grew at 6.5% rate in the fourth quarter of 2020. Wow. When everyone is doing bad, when every other country on earth is doing bad, guys, China is still doing well. Another proof that the Chinese economy is, if not the strongest economy on earth, the second strongest economy on earth. So China cemented its status as the only major economy not to shrink last year. Figures released this morning showed gross domestic product rose 2.3% on the year, better than the 2% expected, thanks to an annualized growth of 6.5% in the final quarter of the year. The quarterly growth figures were in turn supposed by demand for Chinese goods, already evident in the last week's record trade surplus. Industrial production growth accelerated to 7.3% from 7% in November, but retail sales Growth again disappointed, slowing down to 4.6% from 5%. However, guys, there is a balance. And overall, the Chinese economy is doing really, really well this year. The figures which carry the caveat attached to all Chinese GDP data come at a time when Beijing is anxious to show its superior handling of the pandemic. World Health Organization team arrived in the country last week on a mission to clarify the origins of COVID-19 after months and months of administrative delays by the Chinese side. Right, who knows? Maybe they had something to hide. Maybe they weren't really comfortable with a lot of people coming in their country. Once considering they still have the virus active in the country. Who knows what the truth is? But what's important is that China is trying to be transparent, at least with certain things, and they are allowing a lot of researchers in their country, and more than that, they are willing to send their local researchers to other countries to try and help combat this COVID-19 pandemic that suppressed the world economy last year. Number 2 on the board, guys, and very, very important, Biden's first executive orders will happen today, guys. President-elect Joe Biden will issue a flurry of executive orders in his first days as president with the explicit aim of reversing as much as possible of his predecessor's agenda. The orders will include rejoining the Paris Climate Accord. Well done, Joe Biden. Ending a ban on travelers from Muslim-majority countries and mandating the use of face masks, both on federal property and for interstate travel, whether by road, air, or rail. Other orders planned include an extension of the moratorium on evictions and the expansion for testing the COVID-19 virus. Right, number 3 on the board. So from what we see, I don't want to go into it too much because I'm going to talk to Neil Wilson about it. That will join us in about 7-8 minutes from now. But from what we see, Joe Biden has a very dovish approach, and he's trying to show everyone that the U.S. is friendly and they're welcoming people in their country. And at least Joe Biden, and Joe Biden stuff is not really happy with the restrictions and the financial war, let's say, that Donald Trump has started in the last few years. Number 3 on the board, guys, stocks follow U.S. lower on virus concerns. Global stocks were mostly lower today following the weakness on Wall Street on Friday that stemmed from the weaker than expected retail sales report for December. In Asia, the Japanese and Korean benchmarks were both down by nearly 1%, while Chinese indices bucked the trend on the back of the GDP data. In Europe, concerns about the pandemic's latest wave dominated, with the UK FTSE 100 and the French CAC 40 each losing 0.3%. France extended its 12-hour curfew to the whole of the country over the weekend, while Germany is set to debate tougher and longer restrictions tomorrow. So the pressure on the European currencies, guys, and on the European markets is far from over. We still have European countries heavily affected by this bloody COVID-19 virus, and we might see lockdowns still in place for at least, 2 weeks, 3 weeks to up to 1 month. Now, things should start getting back to normal as the numbers of new infections drop, as the numbers of newly vaccinated people rise, and there will be a balance. But let's not forget, between the first shot and the second vaccine shot, you have about 7 days. Yes, so still, even if you get vaccinated today, you will still have to be in some sort of lockdown, for 5 to 7 days for the virus to for the vaccine, to work. Right now, U.S. equity markets are closed today. The dollar has opened the week solidly, rising 0.1% and pushing the European currencies lower. The U.S. dollar index is currently trading at 9080 as of 6:30 a.m. Eastern time. Now, number 4 on the board, guys. Germany's biggest party opted for continuity candidate Armin Laschet to succeed Angela Merkel as its head at the weekend. Laschet has constantly supported Merkel's policy on Europe, although showing himself to be more open to dialogue with Russia than Merkel, whose relations with Vladimir Putin were wrecked by the invasion of Ukraine in 2014. Right, elsewhere in Europe, Italian bond yields edge higher as Prime Minister Giuseppe Conte continued his search for the new allies to secure a majority in parliament. Former center-left Prime Minister Matteo Renzi pulled his Small Italia Viva party out of the coalition last week, ostensibly in a dispute over the government's handling of the economy during the pandemic. Right. And number 5 on the board's Keystone XL fights for survival. Crude oil prices fell, but industrial metals rose as China gross domestic product data painted a picture of robust near-term demand. By 6:40 a.m. Eastern Time, U.S. crude futures were down 0.2%, while Brent futures, the international benchmark, were down 0.4%. Anticipating the first wave of executive orders from Joe Biden, the consortium behind the Keystone XL pipeline, which aims to ship crude from Canada to the Gulf Coast, is reportedly preparing plans to use only renewable sources of energy to operate the pipeline, while also using only unionized labor. Unionized labor, guys. Sorry. Happy Monday. Biden and the other Democrats have been constant opponents of the pipeline. All right, this is what's happened with the markets today, guys. Let's have a quick look at the charts. And Neil Wilson will join us from London in less than 4 minutes. Let's see what is happening with the markets today, guys. Yeah, when the U.S. markets are closed. So let's see. We're going to start with crude oil as usual, guys. Crude oil on a 60-minute chart. We're looking at crude oil WTI futures trading at 52.32 this afternoon. I see Neil Wilson joining us now, guys. So I'm only going to go through a couple of assets before welcoming Neil Wilson. So crude oil, 52.32 this afternoon for crude oil, still supported by that 200 moving average on a 60-minute chart. And it encounters a bit of resistance from the 50 and the 20 moving average. Overall, it's well supported. Yeah, even though it dropped a bit over the last few days. Now, European currencies traded way lower today. We can see the downtrend, and the euro reached the low it had at the market's opening this January, shortly after the new year. 120.65 for the euro this afternoon, guys, with great potential to the downside as more countries in Europe are talking about lockdown measures. Yeah, and not only. Now, on the other hand, we're looking at the pound, which saw a bit of weakness today, guys, currently trading at 135.48. Yeah, and by the looks of it, is looking to push a bit lower. We see a dead cross being formed there by the 50 and the 200 MA, with the RSI and the stochastic not being able to recover. Yeah, and hovering somewhere on the oversold levels. 135.50 as things stand right now. Again, there is potential to the downside, guys. Okay, talking about the pound. Okay, let's see what else is going to happen. Now, I'm going to take a 30-second break and welcome Neil Wilson, and he will bring us more news from the UK side of things. Let's see how UK is coping with things after Brexit. Let's see how the vaccination process is going in the UK. So, stay tuned. We're coming back live in 30 seconds with Neil Wilson from the heart of London.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, guys, then we're back with Neil Wilson, Chief Market Analyst at Markets.com, straight from the heart of London. How are you, Neil? Happy Monday.
Hi, Andrew. Yeah, very well, thank you. Yeah, it's I don't know if today's blue. Is it Blue Monday today? I'm not quite sure, but it's I think quite a quiet session in London at the moment, just for that US holidays. So quietish day to get things going for the week.
Yes, correct. We saw earlier on then that France and Germany are in talks of extending the lockdown period. How is the situation in London, Neil, in regards to the lockdown measures and the vaccination process? Do you have any updates?
Yeah, so I mean, we've closed the air corridors now. They're tightening up restrictions in terms of who's coming in and out of the country. No tightening of restrictions on the ground, as it were. We're still in a lockdown, but the mobility of people, people are moving around a lot more than they were in the first lockdown. There's still, a lot of shops remain open, businesses still operating. So it's not in the same sort of league as that first lockdown, and we're certainly not anywhere near the sort of 6 p.m. curfew nonsense that you hear about in France, which is I'm not quite sure how that can really particularly help. But anyway, and as you say, Germany's maybe moving to curfews as well. Hospitals, I think, here are stretched, very stretched, but cases are coming down, and the vaccination program is moving forward at quite a pace now.
That would have been my next question. Did you notice an increase in numbers again, or a drop?
Yeah, so the rolling average for 7-day rolling averages are starting to really come down. I think in the region of sort of 30% really over the last week or two. So that sort of increase, that growth that we were seeing in new cases sort of over Christmas and the first week of January is really tailing off now. So that is a good thing. That's hopefully going to mean that hospitalizations and deaths will be peaking soon, or may have already peaked, and therefore we start to see them come down sharply. And we should be looking at vaccinating the top 4 vulnerable groups completely by the middle of February. Those 4 groups account for 88% of deaths. So really, once you hit mid-February, things should be shaping up to be a lot stronger.
Fingers crossed. Fingers crossed. Let's hope the situation will improve rather sooner than later. Now, today, the U.S. is on holiday. Yeah, we won't be having the U.S. markets open. However, this day is very important for the U.S. It's Martin Luther King's Day. Neil, help me a bit. Who was Martin Luther King, and why is he so important for the U.S.?
Well, he really led and embodied the civil rights movement in the 1960s. Of course, he was assassinated. But a very important figure in American history and recognized every year. So for some reason, Americans get a lot of holidays at the start of the year, so January, February. And that's, I'm not quite sure why they have so many at this time of year, but they do. But yeah, it's going to be a bit of a thinner, it's a thin session. It's a bit of a nothing session here in Europe as a result of that.
Yes, very, very correct. So Martin Luther King was assassinated in 1968. Yeah, on this day. And since then, Americans are celebrating every year Martin Luther King's Day. Right, now let's move on. We are 2 days away from the official date when Joe Biden, the new U.S. elect president, will step up, and the ex-U.S. president Donald Trump will step down. And Joe Biden's first move will be to issue a list of executive orders to try and reverse as much as possible Donald Trump's actions and bans. This is a big week for the U.S. What should we expect from the markets this week, Neil?
Well, so I think really need to see what Joe Biden does in those first few days. I think we're looking to see if he what sort of appointments he makes. We've just had the announcement of the likely new head of the SEC, the Security and Exchange Commission. Sort of developments like that point to where the administration's heading. Is it heading towards much tougher regulation around, say, cryptos, around big tech, or around oil production and drilling? Those are the sort of things that the market's going to be looking for, possibly quite sector specific. Seeing what corners of the market might be affected by specific appointments and by the rollback of specific policies. Rejoining the Paris Climate Accord, for example. What does that mean? Well, we sort of know that Joe Biden is pushing for a green energy revolution in the US. So we're all kind of already well versed in what that is. But there'll be other sort of areas of sort of policy and sort of, maybe bits of policy in the market that maybe been a bit overlooked that might be affected. So just sort of keeping an eye out for developments, and these will be executive orders that he'll push through. So it's nothing that the Senate can really get its hands on to upset. So really important few days for Joe Biden and the US, and the impact on the markets will be important as well.
Yeah, we're going to see some volatility on the markets. Let's not forget this week we're going to have some big names reporting. For example, because it's the start of the earnings season. Yeah, tomorrow we're going to have Bank of America, Netflix, Goldman Sachs, Charles Schwab. Again, very big names hitting the start of the earnings season this year. Do you have any predictions for Bank of America or Netflix, for example, or Goldman Sachs?
Well, yeah, I mean, I think that the JP Morgan numbers tell you all you need to know about Bank of America and Goldman Sachs. I think those JP Morgan numbers were very strong. They've been able to release $3 billion that they had previously set aside for bad loans. So the amount of stimulus that's come through from Washington means, from the Fed and from Congress, means that the economic impact of the pandemic is much less than it would have been or was feared back in sort of March last year, when they set aside vast amounts of money to cover bad loan losses. So they're not having to do that. Trading volumes remain high. And JP Morgan said it was a challenging year, but it was our best ever year. So quite what you can read into that. I just think it shows that banks do well as long as there's liquidity, and the liquidity is there. Netflix, I think it's coming off the other side of the hill from enjoyed a big pull forward in demand in the start of the year because of the lockdowns. Now we're on the other side of that, so we're probably going to see slower growth. And also, it's got worries about the content library. There's 5,000 fewer titles in the library than there used to be a few years back. It's losing The Office. It's losing Friends. Disney Plus is storming up behind it.
They're killing it.
140 million subscribers in a year, and Netflix has 195 million after a decade or more. It expects to add 6 million subscribers in that fourth quarter to take it to 201 million, but I think it could be a bit light on that front. It was very light in Q3. It was a big underperformance in Q3, so I think Q4 maybe sees again the net subscriber additions being a bit light, and that could just drag the shares back to the sort of bottom of that range. It's been in a been stuck in a range really between I think about $470 and $540, $540, $470. That range since sort of June last year, I think. So looking to see if it breaks either one of those ranges.
Yeah, because Disney absolutely smashed it in the last few months, so it's gonna be a tough one for Netflix. I even changed my preference, let's say, and yeah, let's see how Netflix will do. I don't want to say anything good or bad about them. So the overview on the banks is up. Yeah, at least as things stand right now, the U.S. banks are expected to do well. Netflix might surprise us, however, weak this year. Now, question. Wait. What are we going to have next week? Next week we're going to have the big boys. We're going to have Apple. We're going to have Microsoft and Tesla and Facebook announcing. Wow. Big names. Okay, I don't want to spoil it for next week. Now, tell me about markets.com and how this Brexit affected the clients of markets.com, Neil.
Yeah, I mean, Brexit's not really had any impact on us. We are regulated, in London with the FCA, in Cyprus with CySec, in Australia with ASIC, and elsewhere. So we've got the global positioning anyway. It's not really been an impact on clients. So thankfully, it's been a smooth transition for our clients.
So the Brexit did not affect in any way the ability of onboarding European clients, let's say.
No, because we're fully sort of fully global regulated entities in the EU, in Cyprus, and in London. So. Yeah, not been a problem for us, I guess. We've all had sort of 4.5 years to prepare for this. So I think most companies that were sort of reputable type companies, if you like, will not have had any trouble because we, as I say, we've had a long time to prepare for it.
Right. And do you have any announcements this January for your traders? Any promotions or I know it's against the regulation to have super promotions, but do you have any incentives, any sort of promotions for clients this year?
Well, we run regular sort of educational offerings. So, for example, you get free access to a couple of education providers. One is, you don't mind me saying, they're called Trend Signal, so we offer access to that. Trade Room Plus is another. And I think there's a number of other sort of educational offerings that we can do. So if clients are looking for sort of signals, systems, that kind of strategies, help and support with that, then we can give you a number of months free access to these providers. And then also we've just launched a bunch of new cryptocurrencies that you can trade on the platform. So we've now got, I think, 25 different cryptos available now to trade. And that obviously not applicable to anyone in the UK because of the FCA ban on retail trading of derivatives, crypto derivatives. But I think still applicable to just about everyone else. So those are the main things that we're looking at.
So you've added more cryptocurrencies for people to trade on.
That's
okay,
right, yeah.
That's good. All right. Now, quick look. Let's have a quick look at some cryptos on your trading platform. Oh yeah, you have quite a few. Wow. Okay, I am impressed, and I've seen a lot of trading platforms. All right, so you have Tron, you have Stellar, you have Ripple, Neo, Monero, Litecoin, EOS, Dash. Wow. A lot. How are the trading conditions, by the way, in comparison to other CFD firms?
Well, I think our off the top of my head, I'm not 100%, but I know that our Bitcoin spreads come in pretty decent at 0.4%. So I think those Bitcoin spreads are pretty good. Otherwise, I'm not 100% on where we stand in relation to some of the others, but certainly, the execution and so on is fine. And as I said, that 0.4% on Bitcoin, I think, is up there. So looking not too bad.
Right. From what I know from doing my own research, you guys are really competitive. Yeah, versus a lot of other brokers in terms of spreads, but on the conventional asset classes. I didn't specifically research cryptocurrencies, but thanks for letting us know. A lot of brokers have very high fees, very high commissions and spreads when it comes to Bitcoin. Yeah, especially now that everyone is trading it. But I'm glad to see that you guys are doing a great job and you're still keeping the spreads competitive, let's say.
That's it. Yeah. I mean, I think, as you say, yes, cryptos are competitive, but, euro dollar 0.4 pips, DAX, I think 0.8, so some pretty good spreads on some of the other major asset classes, and crude oil at 3 cents. So yeah, some good spreads there.
Right. Neil, thank you for being with us today. I'll talk to you again if you're available on Thursday, and let's see what is the message that Joe Biden has in his agenda. He has a very dovish approach versus Donald Trump. I'm curious to see how
it'll be a bit more steady, I would imagine.
And what's your hint? I mean, where does that leave the US dollar index, Neil? Is it still going to be in a downtrend? Are we going to see that uptrend anytime soon? Because by the looks of it, it's pushing higher every day.
Yeah, it seems to maybe just bottom, but it's hard to tell. We've got it through that 21 day, starting to look at the 50 day, I think, on the dollar index. So yeah, it's maybe showing signs that it has bottomed. I think it was about 89.20 or something like that. And just nudging up. The problem is the euro, the dollar index is heavily weighted against the euro, and therefore, really starting to see weakness in euro. I mean, that, the euro was rallying against, a weaker European sort of outlook. It just didn't make sense really, but we had expected the dollar to weaken, but the euro now is starting to come off. I think, real concerns about the extent to which they can really fix the economy. I think you're going to see US outperformance versus the euro area economically this year, just because of the vaccinations and so on. And that said, though, I think European equity is probably going to do quite well this year.
Right. Okay. I see the VIX is on a downtrend. It's creating lower lows. So the volatility is there, but it's dropping slowly. The closer we get to the new U.S. president, to Joe Biden being sworn in 2 days from now.
Yeah, I mean, the volatility is, it's hard on a day like today, just with the US market, cash equities are shut, so it's hard to get a real feel for that VIX trade at the moment. That'd be one to probably be very careful of on a day like today.
All right. Neil, thank you ever so much for being with us today. I'll talk to you again on Thursday, and let's see what big things will happen in the markets by then. Who knows? Maybe Bitcoin will go back below 20K. Right. Neil, thank you ever so much. Have a great day. Nice. We had Neil Wilson with us from the heart of London. I'm going to take a 30-second break, and then we're coming back live with the charts of the day and the signals of the day. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, people, and we're back with the charts of the day. 135.52 for the pound this afternoon. As I said, with the RSI and the stochastic crawling through the oversold levels. We're moving on to USD JPY, guys, which is literally flat since Friday. We did not see any big movement on the USD JPY. 103.73 this afternoon. Yeah, with the RSI and the stochastic still undecided where they want to go, which direction. Now, the Aussie dollar, on the other hand, took a plunge on Friday, guys, currently trading at 0.7682. Yeah, we saw a bit of an effort this morning, a few hours ago, a retest of that 20 MA to the upside, but still, the Aussie dollar seems to be dropping to the weakness of, to the strength, of the US dollar. Now, we have an important and interesting support level at 0.7663. Okay, for the Aussie dollar, guys, if that level will be broken, then we will probably see the Aussie dollar trading in the 0.76 range. Okay, and from there on, we see what's going to happen. 0.7622 is another support level if this one will be broken to the downside. Now, USD Cad, on the other hand, we see a bit of positivity on the USD Cad. And if we look at the charts the right way, guys, we see what seems to be a ranging market. Okay, we can see the average highs and the average lows. Yes, somewhere here, somewhere in that region. Okay, and we could get a hint from this range. Yeah, when to buy, when to sell, when to enter the markets, and so on. Now, for the ones of you that are looking to trade USD CAD, keep an eye on that gold cross, guys, that was formed by the 50 and the 200 MA. We might only see a shy retest of that 200 MA, yeah, not allowing the USD to go all the way down and test the lows. Yeah, so very, very careful if you decide to go short this afternoon on the US dollar CAD. Okay, careful with that take profit level, yeah. Better safe than sorry. So keep an eye on that 50 MA of at 127.24, yeah, and try and trade it with caution. Okay, today not a lot will probably happen as the US markets are closed, but brace for tomorrow, guys, because any events that happen over the weekend today and will happen tomorrow on the European trading session or the Asian trading session will definitely impact the US markets open. Now, on Friday, we saw a weak trading session for the S&P 500 closing lower than the open, leaving a bit of a gap. We might even see a retest of that 200 MA at 37.2465 tomorrow after the opening. Okay, Bank of America and the big boys that will announce their quarterly figures tomorrow. Okay, they might help a bit boosting the S&P 500 and the Dow Jones. Talking about Dow Jones, again, the Dow Jones closed in red on Friday at 30,814.26. Okay, apparently just an inch from that 200 moving average to the downside at 35.33. RSI stochastic still pointing downwards. They did not manage to enter the oversold levels yet. So let's see what's going to happen tomorrow. Big day tomorrow for the US markets. Now, the US dollar index, guys, is in an uptrend that started on the 14th. Okay, that started 4 days ago on Thursday. Okay, and it didn't stop since. 90812 for the US dollar index this afternoon. We see a shy, almost retest of that 20 MA to the downside, but the RSI and the stochastic still remain quite high in the overbought levels. Let's see what's going to happen next. Gold futures, on the other hand, okay, we saw a spike on Friday when gold almost reached 1,800 flat. Okay, it's currently trading at $1,833.40. Again, subdued apparently by a strong dollar and subdued by that 200 moving average that is pressing the gold price to the downside. Lower lows, lower highs for gold on a 1 hour chart. RSI stochastic, the RSI is turning around from the 50% mark, again pointing downwards, indicating quite a bit of weakness on gold futures. And the RSI, guys, is the stochastic, is turning around. There is the stochastic is turning around from the overbought levels. Yeah, and it indicates that we might see a sharp drop in gold futures. Now, let's move on. We're looking at Brent oil futures, or the UK oil, or the European oil, guys, currently trading at just short of $55, $54.98 for Brent oil futures this afternoon. Again, a bit undecided. We saw that retest, and by the looks of it, the price is struggling not to fall below that 200 moving average, which will imply a potential downtrend. So let's see what's going to happen with light crude. Now, silver futures this afternoon, $24.90 for silver futures, again pointing downwards, which just like gold had a whipsaw movement a few hours ago. We saw silver futures reaching 24.23, almost 24 flat on Friday. Now, it's more likely for us gold and silver to go downwards than upwards, guys. But again, we're going to have a look at the signals in a second and see what the analysts are thinking about these lovely assets today. We're moving on to Bitcoin right now, which is trading at $36,425. It retracted from the all-time high, which is now at almost $42,000, guys. Okay, once again, if you have questions, if you're struggling with anything, type your comments live. Let me know what you're struggling with, and I'll do my best to help. Also, let me know what you think about the show, guys. Now, 36,466 for the Bitcoin. Bitcoin is ranging for a few days now. It's unlikely to believe that Bitcoin will break the 42 once again in a crazy movement like we saw last week, a couple of weeks ago. But anything can happen, guys. As things stand right now, the price is supported by that 200 moving average. We see the candlesticks consolidating above that 200 MA, which usually implies a bit of buying power. On the other hand, though, we're looking at Bitcoin creating lower highs, okay, and a couple of lower lows, which might have tricked some of us into thinking that Bitcoin is looking to go down again. Who knows, maybe downwards towards the $20,000 mark. On the other hand, Ethereum, guys, is still standing tall. We're looking at Ethereum trading at $1,236, an increase of over 100% within less than a week, guys. Now, that is proper investing. Now, in the last few days, we're looking at Ethereum versus the US dollar going sideways. Again, the good news is that it's trading above that 200 MA, the red line that you see there. The bad news is it didn't manage to create higher highs. So we might see a bit of weakness in both Bitcoin and Ethereum this week, in the next couple of days at least. This is what the technical analysis is showing. But we know by now cryptocurrencies are the only asset class that are not driven mainly by technical analysis, and they're mainly driven by the news, just like stocks, and indices. Right, very quiet day on the European trading session, guys. Nothing big happened. Let's have a quick look now at some trading signals provided by investing.com. And if you want to get more trading signals on your chart, guys, feel free to check markets.com. They have an amazing trading platform. They have 5 amazing trading platforms, but this one is the most amazing one that provides you the trading signals straight on your trading platform. Now, We're looking at Euro USD and the GBP USD this afternoon with strong buy positions on a 5-minute and a 15-minute chart, guys. The daily remains strong sell, a bit of mixed, but for the short term, we're looking at a potential correction after the big drop on the euro and the pound versus the US dollar. On the other hand, we're looking at USD JPY with strong sell indication coming from investing.com on all 3 time frames. USD CHF, again, strong sell indication from investing.com on a 5-minute chart. The rest remains neutral. We're looking at the Aussie dollar with an indication of a strong buy on a 5-minute and 15-minute charts. Okay, versus the US dollar by investing.com. A lot of mixed signals today, guys. A lot of mixed signals today. The euro is supposedly weakening versus the pound. Yeah, and the US dollar is supposedly weakening versus the Canadian dollar. Okay, remember that ranging market that I was telling you about, guys? Right. Now, on the other hand, the pound, GBP, JPY, and GBP CHF, which is the Swiss franc, guys, show strong buy positions, a strong buy indication on 2 time frames. Yeah, the 5-minute and the 15-minute one, as well as the daily for GBP CHF. Okay, so the pound is supposedly doing a bit better today. The euro is supposedly weakening versus the pound, and the US dollar is supposedly weakening versus the Japanese yen, the JPY. Now, quick look at commodities, guys. Let's see how the analysts see the price of gold and silver going today. Right, gold, all red for gold, strong sell indications for gold, guys. Silver as well, sell and strong sell indications. Copper mixed, we're looking at a strong buy on a 5-minute, 15 minutes and hourly are a strong sell, and the daily is still a strong buy, mixed signals. But on the other hand, guys, crude oil WTI and Brent oil, 4 green for crude oil WTI and Brent oil this afternoon with 4 strong buy indications from investing.com. Natural gas again has a strong buy on a 5-minute chart, and the daily is a strong sell. Right, we saw silver just turning into a strong buy. Okay, let's see what is happening with the markets. Now, US wheat, guys, the last but not the least, strong buy indications for US wheat this afternoon. You see how difficult it is to predict the market, guys, without the participation of the US trading session. Very, very difficult. Now, let's have a quick look at some stocks, guys. I'm gonna give you some European stocks to have a look at because the US stocks are not trading today, and the European markets are about to close. Let's see if there's anything interesting, anything that might give you a good trade. Nah, from what we see now, a lot of mixed signals, guys. A lot of mixed signals. Strong buy, strong sell. Nothing really giving us a sense of direction for stocks. We see BMW ST with a strong sell indication this afternoon, and we see BASF with 4 green with strong buy indications. But apart from that, nothing really interesting is happening. Nestle, strong buy indication on 3 time frames for Nestle, and Telefonica, guys, all green for Telefonica this afternoon. Right, very difficult, very difficult without the US trading session. Now, tomorrow, guys, we're gonna have Bank of America, Netflix, Charles Schwab, and Goldman Sachs announcing their 4th quarter earnings for 2020. Let's see what's going to happen. You saw earlier on, Neil Wilson was saying most probably this year we're going to see the banks doing very well. Not so well for Netflix, as Disney, okay, and Amazon seem to be taking some clients of Netflix. On Wednesday, we're going to have some more big names, guys. We're going to have Morgan Stanley announcing their 4th quarter earnings for 2020. Procter & Gamble, United Health. What else is happening? Right, this is it. Kinder Morgan will announce as well, and Bank of New York Mellon will announce as well. Then let's see, next week, guys, we're going to have the big boys coming out to play with Apple, Microsoft, Tesla, and Facebook. Okay, on the 27th and 26th. And then on the 28th, we're going to have Visa and MasterCard again announcing their 4th quarter earnings. AT&T again on the 27th will announce, guys. Okay, and Eli Lilly and Co on the 29th. Okay. As we get closer to those dates, I will elaborate more on the numbers. For today, I just wanted to give you a sneak peek on what's expected to happen with the markets this week and next week. The earnings season is on, guys. Let's see what the earnings season will bring for us this year. Right. Join me again tomorrow, guys. Same time, same place for another round of market talks. We're going to have more things to talk about tomorrow as the U.S. markets will open again. Once again, happy Martin Luther King's Day for all our U.S. friends, guys. And join me again tomorrow. Remember to smash that subscribe button, guys. And remember to trade responsibly and may all your trades be in the money. See you tomorrow, guys. Have a good day.